Yeah, I was going to ask you about pound yen. So, of course, you've got two very different currencies here, right? When you talk GJ, you're talking the pound, which is right now very, very hawkish compared to the Bank of Japan, which they are incredibly dovish, right? Meaning that they're not looking to raise rates. That they plan on keeping them low. And so when you have this divergence, when you have, pound yen trading like this, it makes a lot of sense in my personal opinion, as you have, the UK, which is struggling with high levels of inflation. We've talked about this story a lot on the streams. As they struggle with that, they'll be forced to probably keep rate and monetary policy tight, keeping rates high. And so that kind of creates an attraction to the currency, especially compared to the yen, which is sort of the opposite effect, where you get that lack of interest, in fact, even bearishness, especially recently, Frank, with all the stock market buzz and kind of risk on sentiment. Do you think that adds extra lift to the pound yen if that stock market stuff continues?
Oh yeah. Basically anything risk on favored is definitely going to go against the yen. So if stocks go up, there's some correlation with the pound and the euro. It's not 1-to-1 like I don't know for sure, but it's definitely like opposite of what you would say yen is. So in terms of sentiment, pound, euro, they're all against or they're all risk averse, or I'm sorry, risk favored, whereas yen is risk averse. Dang, my mind is all over the place. But yeah, so if stocks go up, that's usually a sentiment of economic health looking forward. Pound and euro, Aussie, they all take advantage of that. And so like pairs like Swiss yen, pound yen, which are at the same time seeing economic expansion and a more hawkish central bank, is definitely good for pairs like these. So I'm looking at pullbacks on both on the 1-day time frames. They've had some steep runs to the upside, and just hoping that it comes back far enough to where we can catch a decent level, maybe on the trend line or something. But yeah.
What's up?
Dude, what happened to you?
Haven't you heard? It's the summer half off discount sale.
Oh, that's right, I forgot.
Right now only, get half off any of our VIP Discord memberships. These memberships include access to our signals, where you can get entries and exits from Frank and I, and full breakdown and analysis with each trade. You can learn our strategies in detail. You can learn how to get funded with our training material to help traders looking for funding. And you can also join the chat room community. We have several membership opportunities, so click the link and check them out for yourself. And remember, you get half off if you either message us or use the discount code you see on the screen now. Gold tanking off a cliff today. Really quite a crazy move there. Gold yet again rejecting the 1965 mark and now trading back down at one point this morning around 1933. What are you looking at today, Tom? Are you looking at gold? Are you looking at yen pairs? We'll give you the screen share for a moment. You can share a little bit of what you're looking at.
Okay, cool. So I'm looking at them, but they're not at points where I can trade them. So if we start with gold, guys, and also a quick point, instead of coffee, beer is equally helping to perk you up, guys. I always find. Probably a bit too early for you guys. Yeah. So yeah, gold, guys. I mean, just look at this disgusting price action. I mean, the market doesn't know what to do with this pair. So how can we trade it? Is my sort of feeling about this pair. You've just got buyers and sellers just fighting in this, I call these a box of indecision. There are no winners. You've just got buyers and sellers knocking heads, and no one's winning as yet. So for me to trade gold, it basically needs to make its mind up. Yeah, if I get a move out of this box, we get a green candle like this, looks something like this, then once we get a break of these boxes of indecision, they're normally very quick and aggressive moves. So if we see a bullish candle like this, I'll be buying it. And equally, if we get a bearish candle, that looks something like this, excuse my drawing of a candle. And then again, I'll be shorting it. I don't particularly have a bias until it breaks out of this zone, and then I will trade it. I like these boxes of indecision. They normally lead to good setup. So whichever way it breaks out of this, disgusting price action, I'll trade it. If we look, I mean, like, just there's a little one here. There was a few days here with gold where there was a bit of a box of indecision. Okay. And then all I'm looking for, guys, is a winner. Yeah, you've got sellers and buyers just fighting to the death. And until you get a winner, I'm not interested in it. And then when you do get a winner, like this candle here, look at the pips you can take with that trade. They normally move quite quickly out of these boxes. So that's what I'm seeing on gold. I won't touch it until we get out of this box.
Yeah, and it's been a really stubborn box at that. I mean, this is going on several weeks now of just back and forth price action, and a lot of traders. We talked about this in the past too. Is a lot of traders insist on trading one particular asset or two particular assets. And if you guys notice on the show, if you're a regular viewer, you know that we look at a lot of things. We look at dollar pairs, yen pairs, gold, indices. Heck, I even get into bonds sometimes. Like, there's so many different things to look at and talk about in the markets. And sometimes, if you are the sort of person who trades gold only and you're looking for trend following setups, for example, well, unless you're dropping down to a really low time frame, it's been really hard to find any significant trends on this chart. Sure, you could possibly get down to like the 5-minute and say like, hey, there's some moves here, that sort of thing. But again, there are many things out there to look at and to trade. I'm not encouraging you to trade a million things. I'm just saying that sometimes a particular market is just not going to give you the setups that you're looking for, and that's okay. At that point, it's okay to just maybe look at something else, maybe find something that is behaving in the way that you want it to. A dollar Swiss is inherently or historically a very choppy pair. So if you like trading range bound moves, perhaps you look to dollar Swiss for sort of range bound back and forth plays. However, during this time that works great, but then there's periods of time even in that pair where, again, things start to trend very clean one direction, and you kind of have to be a little bit adaptive to what is moving the way that you trade, I guess. If you're a range bound trader, this is great, but if you're a range bound trader, this is really tough, right? So you have to kind of be adaptive in that way. So Frank, you got trailed out of Swiss yen. You were talking about a pound yen as well. Where are you at with gold or indices? Do you have any setups that you're looking at or plans for those markets?
Yeah, so I do like gold. I still have a bullish bias on it. I'm not in any trade at the moment. But what I like is this very stubborn demand zone in the 1930s. Prices just hit that so many times and hasn't broken underneath. I guess you could say the same about this long-term trend line, but it kind of stayed where it was at, and until it breaks underneath, I'm not really looking to long or short. But like you said yesterday and what Tom said today, a break above that resistance level 1960, 1970 would be some kind of confirmation. So I'm kind of with you guys. I'm not really looking to trade it right now. And if it breaks underneath, I don't even know if I would really want to short it. I do have this long bias towards gold, and I'm hoping that it can actually figure things out and move to where the market is kind of feeling, although COT is definitely counteractive to that. So having said that, though, the only clear thing I saw this week from COT was on the stock market. So the S&P and the NASDAQ saw some pretty good additional long contracts coming in for the week. And on a technical side, it kind of, pulled back on the 1 day time frame, couldn't really stay above that channel. So it's kind of similar to yen pairs. I'm looking at a deeper pullback so I can enter in at a better price, but you never really know with how resilient the stock market is. So just looking at any kind of bullish setup, I guess.
Yeah, Frank, and I wanted to just detail what you were saying about the COT. Of course, I pulled it up while you were talking. Indices been really strong. And what Frank was talking about in terms of the COT, if you heard him say that and you were unsure of what he meant, of course, we're talking about the commitment of traders data. This is a way to look into essentially the positioning of institutional traders. So in the United States, the CFTC requires large institutional players like big hedge funds and money managers to disclose on a week-by-week basis what they're buying and selling. And so Frank mentioned the indices, so the S&P 500, the Dow Jones with the US 30, the NASDAQ or the NAS 100, the JP 225. This is not a US indice, but it is the Japanese stock market, the Nikkei. When we look at all of these assets under a microscope and we say, what's the latest in terms of development here, you'll see that the NASDAQ has a slight preference for buy side. The Nikkei has a very strong preference from institutional traders on the long side. So big money is buying the Nikkei, it's buying the NASDAQ slightly, and it's kind of still on the sell side of US 30 and S&P 500. However, what Frank was just pointing out was the recent change or the recent developments in these particular assets under these columns here. So this shows you, as of the most recent weekly reporting, what the change in those contracts is looking like. So when we look at the S&P 500, what we see is that on the short side, we had a significant decrease in the number of short contracts opened. And if we take a look at US 30, same story. And if we take a look at the NASDAQ, same story, and even with the Nikkei. So when we look at all the indices, we see money flowing, closing out of short positions. And if we flip it around, the S&P picked up some longs. US 30 was about flat with a little bit of decrease in longs. The NASDAQ, slight increase in longs, and the Nikkei, some decrease in longs. Overall, though, the story that Frank pointed out, the decreasing in shorts is a very interesting component. You have to think, if there's a lot of hedge funds and they're very heavily short against the indices, and now they're starting to unwind that trade, meaning they're starting to undo their trade. They're starting to take off shorts. They're perhaps covering, perhaps taking profits, perhaps taking losses. Doesn't really matter what's happening there. The point is shorts are coming off for institutional traders. And that's a big deal for talking indices. So I think that Frank and I have been talking about this a lot. That gives some room to the upside for the indices. Now, of course, buying it at the highs is a tough call, but keeping tabs on it for looking for pullback plays to buy dips is something that I definitely see myself looking to do on things like the S&P, the NASDAQ, etc. So that is where I'm at with the indices. Dollar getting a little bit of a bid here this morning, probably putting a little pressure, on the S&P. If that keeps coming down, I'll be looking for pullbacks personally. Tom, what do you think on the indices? Do you have any take on those?
Yeah, so just NASDAQ in particular, if we look at the weekly chart, this is the weekly chart for the NASDAQ. It's currently hitting some, key resistance level here. So it'll be interesting to see how it reacts here, because I just can't help but think it's due a retrace. It's so overbought. But yeah, buy the retrace really for any of the indices pretty much, and how far this will retrace, we're not sure, but yeah, it's just a case of it that a retrace is due, and this seems like a pretty good level for me for that to start happening. If we take a look at the day chart, we're getting a couple of days of selling pressure, but nothing too dramatic. It's a tricky one. You want to buy the NASDAQ, but you just have to wait for value. And when I say value, I mean a retrace. It could retrace to somewhere here, potentially, but there's just no value for me in trading this pair. I talk a lot about value, and a retrace gives me value. I just get in at a better price. If I'm gonna sell a car or buy a car, I want to buy it at a cheaper price than where the Nasdaq is now. If I start buying it up here, I'm paying a premium. If I start buying it here, I'm getting a bargain. It's just that idea of value, really. So, but where will it retrace to? That is the $1 million question. But I cannot trade it at the moment. Yeah, it's just too early for me.
I definitely agree. I mean, it's had at this point several weeks of just upward direction only. A lot of optimism coming into the equities market. A lot of risk on sentiment kind of flowing in. But again, still, even though you might have something like a great company like Apple or Google or Microsoft, these companies, even though they're excellent companies, can still get overvalued. Like you mentioned the word premium, you can still pay a premium for these things if they're trading very high. If their valuation is extreme, you have to be careful buying those things, because if a bump in the road comes along and the equities market takes a tumble, you don't want to be the last one to buy. Really, when it comes to indices, I like to trade pullbacks. I do like to try and sort of, as a momentum trader, inherently still sort of buy high and sell higher, but I don't want to buy the highest point, right? So as a momentum trader, inherently what ends up happening is you're still looking for an uptrend. So it's already up, right? So you're buying high, but you're looking to buy at a calculated point where you can still control your risk. So let's say, for example, we picked up a buy around 14,800, stop losses below, and let's say it doesn't work out. No big deal. I'm not going to take a ginormous loss in the account. Perhaps I try again at like 14,500, stop below structure, keep it managed, that sort of thing, where we can kind of still control those risk variables as well.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.